not so positive news this afternoon. The SEC says spot Bitcoin ETF filings are inadequate. The regulator told NASDAQ and CBOE that BlackRock, Fidelity, and other filings are not clear and comprehensive. This is according to a report by the Wall Street Journal. This after investors and analysts speculated that the bid by BlackRock could be a catalyst for a spot Bitcoin ETF in the US. Bitcoin tumbled below 30K. I believe it is back above. Zach, what do you make of this?
It all comes down to the surveillance sharing agreement, right? And that's what is reportedly in contention here. The SEC has long voiced concerns that the Bitcoin spot market is subject to market manipulation, and therefore it's rejected a lot of previous Bitcoin ETF applications on those grounds. So the thing that got everyone all excited was that BlackRock had come to this surveillance sharing agreement with some major players in the space to make sure that they could, again, assuage some of the SEC's concerns about market manipulation and price manipulation in the spot Bitcoin market. Now, according to these sources, they didn't do it well enough. I guess it gives a little bit of room for these issuers to come back and say, no, here's how we can beat this thing up and meet your concerns. But it does sort of counteract the recent narrative in the recent weeks that this was an inevitability because we had these things in place. It sort of suggests that, hey, maybe we might see another round of rejections, which we've seen for years prior. So really interesting if these sources do indeed know this to be the case, that's really what it's going to come down to is, again, these surveillance sharing agreements that BlackRock, Fidelity, and others are baking into their applications this time around. Adam, what do you think?
Yeah, I honestly think that this is pretty fascinating, and I like it in many ways because it's kind of a lose-lose for the SEC right now. First off, it is worth noting that we found out that they were unhappy with this application like 2 weeks after the applications went in, like a week to 2 weeks after the applications went in. That's really atypical. Again, what has been normal for the SEC has been to drag these out, to delay them, and then they finally get to the spot where they can't delay it, and then they reject it. So this is kind of like, this is a little unusual just from that perspective. But look at it from the SEC standpoint, right? Through my cynical lens, which is that the SEC doesn't really want to have any spot Bitcoin ETFs, because when you have a spot Bitcoin ETF, unlike a futures ETF, it means that money that goes in to get exposure to Bitcoin is actually taking Bitcoin off of the market and is storing it in some place that, all other things being equal, actually adds demand to the equation. The SEC in the US doesn't really want that. They want Bitcoin to kind of just go away and these tokens to kind of just go away, especially Bitcoin, though, because they represent a threat in some ways. So when you're looking at these rejections, you have to kind of look at it through that lens. And when BlackRock comes and they apply and they have a track record of like 500 approvals for every 100 rejection, you kind of, the assumption has to be there that they're going to approve it, just because, again, history suggests that they will. So when you look at this situation, you're looking, again, a regulator doesn't want to approve any of this type of instrument, and so they're looking for reasons to reject it. Now, the rejection itself was actually quite weak. To the extent that the Wall Street Journal reporting is true, essentially what they said was, hey, tell us what the exchange is. Give us more details on the surveillance agreement. So that's not necessarily like, oh, no, this isn't allowed. That's like, hey, we want more details. So I think it's great. I think it's actually very funny, and I'm quite curious to see how this plays out, because I think that the SEC is in large part trapped, where they'll have to either acknowledge that they just don't want to do this, which they have not been willing to do, or on the other side, they'll grant it to someone like BlackRock, and then kind of all the concerns that come along with it happen. So I think it's great. I'm really into it. What do you think? What do you think, Will?
Yeah, I thought the same thing. Same point with the delay here was kind of odd, because normally there's that 75-day comment period where they have to like take it in, digest it, and then they can issue something. And historically, we've seen them drag it out to the end there, and then they reject it. And that's why it's taken so long historically to have these ETFs go through, right? So when we had the BlackRock one go through, we had multiple others also file, Fidelity being the latest one, right? That was a big news item last week, and it was confirmed yesterday. This issue seems to be around the surveillance agreement, according to the Wall Street Journal reporting. And I think that ties back into these market structures where Bitcoin exists on top of, right? So if you think about Coinbase or Binance or Huobi or OKX, the market makers for these markets are typically firms that tie in and start working on the back end and providing liquidity for market to trade. Sometimes, however, these exchanges do that themselves. That was a big thing with the Binance SEC lawsuit that came out the other day, was that an entity that is owned by Binance's CEO, CZ, is market making on top of Binance. And I don't think the SEC likes that. I don't think a lot of people like that in traditional exchanges where your market maker is also owned by the exchange, right? They might think that that's unfair. And so I think that is maybe what the SEC wants here is more information about who's creating this market, where the surveillance is coming from. My understanding is that Coinbase is the one providing this information on behalf of NASDAQ, and that seems to be it. But I think they want more information to be able to move this forward. Zach?
No, I think you're absolutely right. I saw Jen's hand, so I want to get her on the record. What do you think, Jen?
Yeah, I just wanted to say on the flip side of the coin, this atypical situation, Adam and Will, that you brought up could be good that the SEC has responded so quickly. I mean, asset managers now have time to respond to these comments and refile. Previously, it's taken so many days. The entire process takes more than 200 days. And so I think that this atypical situation could mean that there is some change, could mean that there's some flexibility, and could mean that they're willing to work with those that are filing these ETFs. So I don't see it as a total negative sign just yet. And it looks like the market doesn't either. I mean, Bitcoin dipped just below 30K, but it's back up. It's been there for weeks since we've learned about the filing of BlackRock's ETF. And so I'm waiting to see on what's going to happen with this one. Zach?
I'm kind of with you on that, Jen. I think that my gut would sort of be along those lines as well, right? Like BlackRock, I think, is the largest ETF issuer in the world, right? They know the process. And this seems to be part of the engagement process with the SEC, potentially in terms of getting this thing over the line. But it really does boil down to the surveillance sharing agreement, as many have pointed out, with the BlackRock application and others. All right, let's change gears.